Good afternoon, everyone. Thank you so much for being here. My name is Kelly Beard, Content Specialist for Maryland Realtors, and I want to welcome you all to the Condo Reserve Studies webinar. I'm going to turn it right over to our Director of Legal Affairs, Kathleen D'Artes, who will lead the discussion today as well as introduce our panelists. As a reminder, this webinar will be recorded and sent out to all registrants after the conclusion of the webinar. We will also post it on our YouTube page if you would like to share it with anybody else. We encourage your questions and we look forward to answering them. Please post all your questions in the Q&A box below at the bottom of your Zoom screen. We will try to get to all of them as they come. And with that, I will turn it over to Kathleen. Kathleen, take it away.
Right. Thank you, Kelly. And thank you everyone for joining us. Someone has their question up already. Goodness, their hand up already. Well, I'm gonna start by introducing our panelists and our topic. I think this is a hot topic that a lot of you are interested in. We're going to go through. There's some recent-ish changes in Maryland law, and some of those changes, there are some deadlines, one of which is coming up very, very quickly. There's an October 1st deadline, so I think that's why there's a lot of heightened interest in this. Just in general, I think everyone remembers there was a collapse of a condo building down in Surfside, Florida a few years back, and that has kind of brought some heightened awareness of the issue of condos and reserve studies and having adequate funds for necessary repairs and maintenance and making sure that the reserve funds are adequately funded. So that's our topic today. And our panel here, we have panelists from a couple different parts of the industry. So we'll be getting perspectives from different areas. The first person I'm going to introduce is Karen Strawn. We are delighted to have Karen with us. You guys, if you have attended any of my classes, like Karen, I throw your contact information out like it's candy. Karen is an assistant attorney general with the Consumer Protection Unit for the state of Maryland, and she's the director of the mediation unit in charge of condos and HOAs. So Karen is a great resource. A lot of times people have questions about resale packages and what's being charged, et cetera, et cetera. I will share your information with them. Karen has been in the mediation, like I said, the mediation unit for the Consumer Protection Division. There are many offices throughout the state. There are full-time offices in Baltimore, Prince George's, Hagerstown, and Salisbury. There are also part-time offices in Frederick and Cumberland. So basically, wherever you are in the state, you'll be able to get in touch with Karen and her team. The mediation unit, you guys take notes of this. The mediation unit handles approximately 10,000 complaints each year, 60% success rate. And Karen has been in this office, in this position for 14 years. So she's a great person to talk to. I just know personally, Karen, I think I live in Baltimore and Mount Washington, and our neighborhood listserv community meetings, you volunteered and you will speak at community organizations and community meetings, very accessible and a great resource for all of us. So we are delighted to have you here with us. Thank you for joining us.
Thank you.
Next, I was going to introduce Igor Konev, who is with Man Properties, Property Management. Igor, your bio says that you started, this is true, everyone, started as a parking lot attendant 22 years ago and kind of worked his way up, worked his way up to the CEO position. So a lot of personal knowledge about the industry, a lot of professional knowledge about the industry as well. Your property management company, Man Properties, it's an accredited association management company designation. You have obtained a professional community association manager designation, very involved in the community, some golf tournaments and charity events. I know you're also involved on the doing some education seminars for Fannie Mae, participating in those as well. Stormwater management, you've been involved in that, then at Ocean City, those discussions. And the Community Association Institute, I know you participate in some education seminars and done some work for them as well. And I will say one thing that I shouldn't acknowledge. One of the classes that we teach is a bias override class and how everyone has implicit bias. I will say, Igor, one thing that I saw, you are a member of the Delmarva Irish American Club and the St. Patrick's Day Committee. And I will say, Kathleen McTeague will say, I was not expecting Igor Konev to be involved with the Irish American Society. So that is one of my implicit biases that I had, but I'm delighted that you are. And again, delighted to have you here as well. Jason Cook is also joining us. Jason Cook is a mortgage professional who has worked his way up as well. He is now the Eastern Shore manager with Waterstone Mortgage. And just before we started, Jason was giving us some updates from Fannie Mae, some guidance that's going to be updated as well. So Jason will be giving us information from the lender's perspective, any impacts on potential buyers purchasing a property, how these changes could possibly impact that. And we are delighted to have Jason with us today as well. So I guess if it's okay, why don't we start with Karen? Maybe if you could provide us kind of maybe just a background about what the law regarding reserve studies was. How does it affect does it affect condos? Does it affect homeowners associations? And what really is changing? Why is everyone so concerned about this October 1st deadline?
You. Well, thank you for having me here today. And I know that this is a topic of quite a bit of interest. What the law required in the past is that you have reserves in your budget that are set to try and make sure that if there are structural problems or problems with your plumbing, your heating, any of your major common elements, that the money is there to make sure that in the event of a problem that you can take care of those problems and get those things resolved without having to have special assessments, without having to have a large influx of money, whether it be by a loan or whatever the situation was. However, the law never really specified that you had to do a reserve study to make sure that you were completing what was needed to be done and funding properly to ensure that you had the money when it came time to make the changes that were necessary. What the law does now is it requires you to have a reserve study done every 5 years, as long as you are in a situation where you have you started with at least 10,000 in common elements. And you're looking at, it specifically says the structural, mechanical, electrical, and plumbing components of the common elements. So structural can include anything from a building to a parking lot. You want to make sure that anything that is included, that you are having those items looked at by a reserve specialist, and the requirements for the reserve specialist are listed in the law and tell you specifically what they have to do. The law does not say that you have to use a specific way to fund the requirements of the reserve study. What it says is when the reserve study is done, whatever the reserve study says you have to fund, that's how you have to fund. And if you do that, you are complying with the law. That's why it's very important to look at the qualifications of the individual who can do a reserve study, because you want to make sure that that individual meets the qualifications. And once they meet the qualifications, they're going to be advising you appropriately as to how to reserve to make sure you have the money available when it comes time to make repairs. It does apply to both condos and HOAs, and it applies to whether you are in Montgomery County, Prince George's County, or any other county in Maryland. I point out Montgomery County and Prince George's County because actually 2 years ago, the law passed in Prince George's County. And so Prince George's County should already be complying with the law. 1 year ago, the law applied in Montgomery County. So once again, they should be already complying with the law. And the new law includes every other county in Maryland. They did look at legislation to potentially change this to be something that you are required to comply within 5 years, but that legislation did not pass. That is something that's possible that may come up in the future again, and it may be something that there is a longer period of time. But for now, the law is as it is written, and it is required that you are complying at the latest by October 1st of this year. One of the things that was asked of me was to determine whether there was any specific reporting or disclosure requirements with respect to reserve studies in the updated law. The law itself that was recently passed doesn't talk about reporting or disclosure requirements, but a resale package is required to have any reserve study included within the resale package. And that's to be provided to unit owners, to the seller of the unit owner, so that they can provide it to the buyer and make sure that the buyer is aware of what kind of funding requirements might be needed in the future. I know there is a lot of concern that there are a limited number of reserve specialists, and trying to get everything taken care of by October 1st may be difficult. I cannot unfortunately tell you that you can extend the time, because that would be telling you to break the law. And the law is what the law is. It is enforced by the Consumer Protection Division of the Office of the Attorney General. And our office is aware that there are difficulties right now in getting reserve studies done. But you should be able to, at the very least, reflect that you have taken the proper precautions, you have worked diligently to get a reserve specialist, and you have done everything you can to try and meet the October 1st deadline. Once again, I cannot tell you that it's okay to break the law. So if you can't perform the study until November 2023, I cannot tell you that there is absolutely no way that you'll be in trouble based on the limited number of reserve specialists. However, the best thing you can do is to be able to show that you have done your due diligence in trying to get it done by October 1st. Because that way, if there is a problem and if there is any penalty that's being applied, it will be mitigated by that information.
That's helpful, Karen.
Thank you.
We had a couple questions already have come up. I'll just run through them quickly. I think the first comment was 5 years. My association tells us it's 3 years. It is 3 years. Karen had said that there was a bill that was proposed to allow the association up to 5 years to get to the required level. That did not pass. So it is 3 years. So that's just to clarify that. Another question was asked, can you get a second opinion on the reserve study? If you're unhappy with is there an appeal process or some way to, to give an appeal or to object or get a second opinion? I don't know, Karen, if you know that, or Igor, that might be.
You can certainly,
Karen?
I'm sorry, you can certainly try to get a second opinion. The problem is getting a second opinion means you're paying for a second reserve study, and there are costs involved in the reserve study. So it may not be beneficial to do that. It may be better to make sure you are discussing with your reserve specialist before the reserve study is done, to make sure that you understand what's going to go into the reserve study, how they plan on determining what the factors are, and how they plan on determining the funding necessary, because that may save you a lot of money in the long run. If you get a reserve study done and you don't agree with it, it is still the reserve study that you're going to be compelled to follow in the event of any enforcement action.
Let me see another question. I guess this is just a point of clarification. Are we saying that the reserve study and repairs must be completed by October 1? I think maybe just to clarify again, when the reserve study has to be completed, when the funding has to be achieved, and then I guess repairs are a separate issue.
Repairs are a separate issue. What the reserve study does is it determines, it looks at and says, you have let's say a boiler for the condominium unit. And the boiler is something that has a useful life of 10 years. And if you are in year 3, you have a remaining useful life of 7 years. So what the reserve study is going to do is it's going to determine how much money you need to raise each year to ensure that at the 10-year period, when the boiler needs to be repaired, that the money is there to make the necessary repairs. So you are not making the repairs immediately. You are reserving money to make sure that you have the repair money available at the time the repairs are needed.
That makes sense. Thank you. Is there a specific penalty in the law if the condo association, for whatever reason, cannot have the reserve study completed by October 1? Is there a penalty in the law?
There are penalties in the law. Basically, what it says is all penalties that are available to the Consumer Protection Division are available to apply in the event of someone not complying with the law. That means it could be fines, it could be an assurance of discontinuance, it could be a one-time penalty, it could be a continuing fine. We try very, very hard to work with associations to keep them in compliance with the law. We're trying not to put it in a situation where you're being fined, because in that case, we're actually harming the people we're trying to help. But I cannot tell you whether or not there might not be a situation where your association might be fined, particularly if you, as an association, make a decision not to comply with the law.
Right, right. And I think that's kind of a natural follow-up to what you had said previously. If you are not able to have the, excuse me, have the reserve study completed by October 1, you at least want to have good documentation showing that you made every reasonable effort and tried to have it done and made an, I don't know, were unable to get the a person, you know, they were booked, you couldn't make the appointment, but you could at least document that you made good efforts and you really have tried diligently to have it performed versus someone who just chose not to, an association that just chose not to. That would be viewed differently by the state of Maryland, I assume.
Absolutely.
Yeah. Commercial properties are excluded, correct?
Correct.
Okay, that was another question that came up. This is a good question. Is there a list of qualified reserve specialists?
Our office does not maintain a list, but what we have done is we have directed people to contact Community Association Institute, who I believe has a list of qualified reserve specialists that they can send to you so that you can talk to different ones and decide which one is appropriate for you.
And there are many structural engineers that do these types of studies, which actually we prefer rather than just getting a reserve study specialist, because in the area we're in, we prefer having an engineer do the inspection of the building before they prepare the reserve study, because if they're not as knowledgeable with our area, they may put in the life of a elevator or a roof at double the life expectancy than what it truly is. So what you really want to do is look for a professional that has done work in the area you're with, just like the realtors used to have the advertising work with a local realtor. In our case, we always say work with a competent professional. So it doesn't have to be a reserve study specialist. It can be an engineer that does a lot of work in the area you're in. That under the law, as long as you are a professional engineer and feel comfortable doing it, you can still prepare, or an architect, you can still prepare a reserve study.
All right, thanks. That's good information. So the state doesn't maintain a list. You should probably reach out to your Property Managers Association. They would have good information, or it sounds like a structural engineer is always a good option. Okay. I think that is probably it. Everyone, just a heads up, I think we have over 500 people today on the webinar. That's how many signed up anyway. We may not be able to get to all of your questions. Our communications team captures the questions. If we can't answer it live, we'll respond after the webinar. One of the questions was asking for contact information. We'll share everyone's contact information at the end of the webinar, so you can reach out to any of the panelists with any follow-up questions that you might have as well. All right, so let's, Karen, did you have anything else you wanted to discuss specifically? Anything that popped in?
The only thing I wanted to tell people is that we do have a hotline that's available Monday through Friday from 10 a.m. to 2 p.m. where you can ask questions as well. And if you're not getting a sufficient answer, ask to speak to a supervisor, because we can help you to make sure that you are going in the right direction and help you in a situation to know whether or not it is appropriate to file a complaint or whether it's appropriate to just get some information and be able to move forward that way. And that hotline number is 410-528-8662. That's 410-528-8662.
All right, perfect. That is going to be very helpful, and your hotline people are going to be shaking their fist at you because you're going to get a ton of questions. But that's what they're here for, everyone. This is the state of Maryland. It's a resource we are certainly all able to use and should use. You know, they're the experts. So we definitely want to reach out to them. Let's transition now. I guess Karen had touched on the list and some information that is available through the property managers. Igor, did you want to talk a little bit about, the law, basically how it was, how these changes are affecting associations, and then we can kind of, follow up with some questions on your segment.
Be happy to, and I see some questions that I'll kind of try to incorporate in it. So, for clarity, the law applies to all condo associations, okay? There's no exclusion on the condo side. For the HOAs, only if common areas are valued at a replacement cost of $10,000 or more. Okay, so it applies to all condo associations. It doesn't necessarily apply to all HOAs, depending what their common areas are valued at. Walter Aurelia asked, what's the minimum standard for a study? So a condominium is going to have common areas, whether that's a parking lot or a roof, walls, etc. So it'll apply to any condo association. One of the things that we tell our clients and have talked about before is that the starting point really is the review of the governing documents of an association. So you start with the declaration and the bylaws to figure out what are your common areas, and then common elements include general common and limited common. So you will have common elements regardless. I don't want to go further into the whether or not the bylaws may call a limited common element to be maintained by a unit owner, because we find many times that even though a unit owner may be responsible to maintain a common element, it's still the condo association's responsibility to replace that limited common element. We always use balconies as example. Attorneys will put in the maintenance and repair as a unit owner responsibility, but the replacement always falls on the association. So if there are questions on that, a condo law attorney should review the documents to make sure that there's a full understanding of what the association responsibilities are. And then once you understand what your responsibilities are, that's when you go to the reserve study professional or professional engineer. So communication here is the key. You want to give the accurate information to the professional you're hiring as to what should be in the reserve study. Windows and doors, are they condo association responsibility, or are they the unit owner responsibility? Meaning, should they be in the reserve study or not? So communication has to start on a clear kind of a position, because if you give a professional erroneous information at the beginning, the reserve study is going to be erroneous, and then you will have to pay to get a second opinion on a reserve study. Another issue we have seen in the past with reserve study is that certain assumptions are made. The condo association or the HOA should have past records of prior replacements, preventive maintenance plans, etc., that may affect the expected lives of these elements when they're preparing the study. So a roof may last 20 years if it doesn't have yearly maintenance, but if you have it under yearly or biannual maintenance, maybe the reserve specialist will allow you to push that life expectancy to 25 years. So again, expectations have to go both ways. The more accurate information you provide to the professional, the more accurate that reserve study is going to be. We've already had a challenge in one association that's currently with the Attorney General's office, where they're challenging the validity of the study and what the study included. So you want to make sure that you communicate to the professional what you're responsible for, when which work was done, so that the reserve study is as accurate as possible. The reserve study will do a great thing for everyone involved, especially in your business, and it's kind of affecting our business too. And that is that it puts everybody on the same level playing field. How many times has someone called and asked, well, why does a 3-bedroom condo here pay double than there? And so once these reserve studies are done, and then within 3 years, every condo association and HOA has to get to the funding level that the study requires, and going forward, you have to fund per the reserve study. It'll basically put everybody on the same level playing field, because now everybody's going to have a reserve study and fund it. Over the last 2-3 decades, we have had many associations that were proactive, had their reserve studies done, were funding things correctly, and never got hit with those surprise special assessments. So the second major benefit of this is that it will significantly reduce the probability of those unanticipated special assessments, because it'll take into account what's coming down the road, whether that's 20 years or 30 or 40 years. The one thing we did try to convince Delegate Holmes last year and the Assembly was to clarify how many years out we should fund the reserves. In example, in Delaware, the law says you have to fund the next 20 years. These are the elements you have to fund. Maryland is not clear. So we have reserve studies coming in, projecting 20 years out. We have reserve studies coming in, projecting out 40 years. So that's another thing that proactively you should talk to your reserve study professional. How many years out do you really want to go, and why? The reserve disclosure had always been in the Condo Act. And even in the resale certificate, there had always been a question if there is a reserve study, or to check if there isn't a reserve study. So if you had a reserve study, you had to disclose it already. Jason Cook will touch on later on, but the problem we're seeing now is that Fannie and Freddie are requiring them, and a lot of underwriters may or may not understand the purpose of the reserve study, but Jason will touch on that. Because of the reserve study funding and the insurance premiums all over the country are going up significantly, every budget is affected by it. And so over the last couple of years, and we will see it going forward, at least for the next 3-4 years, between funding the reserves and insurance premiums and inflation in general, these budgets have to be adjusted up. And that's an honest conversation we have daily with our clients. It may not be something we want to tell them, but you have to give them the honest projections. Any reserve study that had not been done over in the last few years, you may as well throw it out the window, because with inflation over the last 4 or 5 years, many of the costs have doubled. A variety of things go into it. There's environmental laws that went into effect that apply to coatings and roofing materials and VOCs, volatile odors. So it's great that the law requires an update every 5 years, because anything past that, that study is really no longer valid. We have a handful of associations that actually get updates every year. They work closely with their professional every year to make sure that they update the numbers just for inflation, to make sure that they're still staying on track.
Is that to the CPI? Is that what they use, or is there some other?
Now, we have stopped using CPI because construction costs seem to far outpace CPIs.
Gotcha. Gotcha.
In example, roofs and aluminum railings in the last 5-7 years have nearly doubled. So there are certain things that you know, you cannot rely on the CPI. And then you know, communication from all of our positions, right? We're in the people business. We have to talk to everyone, and the realtors have to talk to the buyers and the sellers and explain that these are the facts. And it's really a good law because it tells you what the true cost of owning and running a condo is, or an HOA. No more, you know, hidden and unforeseen things should happen. I mean, things can always happen, but the things that you can prognose and establish and calculate ahead of time can help you plan for the next several years. So even though this is a bit of a hassle right now, in the long run, it's going to be a good thing for everyone involved. That's my opinion, and we'll see how it plays out.
Okay. Let me just, a couple questions that were asked in the chat. One, are there grants available for associations that cannot afford a study at this time? To my knowledge, no. Yeah. Yeah. I mean, this is kind of all about fiscal responsibility and you know, that's really the focus. So I think at this point, there's no money available for that. Here's one question I think we could probably, any one of us could answer this. What if the HOA has done its own study but not used a specialist? That's not acceptable under the statute. I actually have it open in front of me. Each reserve study required under this section shall be prepared by a person someone who has prepared at least 30 reserve studies within the past 3 calendar years, participate in the preparation of at least 30 reserve studies within the 3 calendar years while employed by a firm that prepares reserve studies, holds a current license from the State Board of Architects or State Board of Professional Engineers, or currently designated as a reserve specialist by the Community Association Institution or professional reserve analyst by the Association of Professional Reserve Analysts. So regardless of whether you have a small condo with 10 units, 12 units, whatever, the president of the condo association can't just go and perform the reserve study. It really is, it's the law, it's a serious requirement. Your association has to take it seriously. Let me see another question here. Where was it? This is interesting. I don't know the answer to this one. We have a condo association that is a marina. Is there any exemption for non-residential type situations? Well, I think it does not apply for commercial properties, correct? I don't know. Is this a marina? Maybe we need more information. Is this a marina like a dock attached to a residential condo, or is it really a separate association for the marina? Let's assume it's a separate association for just a marina.
If it is a condo association that's a residential marina condo association, then it would still apply.
Okay. If it's a residential marina, yeah, it would be treated as residential. Okay, that makes sense. Okay, if it's non-residential, if it's just a marina with no residences, then
it would be considered a commercial business, I believe.
Gotcha. Okay. All right. All right. I think that is it. Yeah, we can go back to these questions, I guess. Oh, you know what? Actually, Igor, let me go back to you for one question. I don't see this in the chat, but I'm sure this is one of the questions everyone has. Right now, it's a transition period, right? I don't know percentages, but a lot of condos have been doing the reserve studies consistently and regularly over the years. They've got their funding levels where they're supposed to be or close to it. No issues there. I guess the question arises maybe for associations that are not quite there yet. Maybe if they're just doing the first reserve study and it's going to require funding at a certain level where they're not there yet. From our people who are watching this, most of them are representing buyers or sellers. Someone wants to help help someone purchase a condo, and they know that the reserve study has just been completed and they're going to have determined what this funding level is, and they have 3 years to collect it. How does that buyer find out what's going to happen? How much extra money am I going to have to pay? What kind of information can they get from the association in this sort of transition phase?
So the reserve study would typically have a cash flow projection of 20 years to 40 years. And you can look year by year. So a lot of the ones that were underfunded the reserve study calls for additional assessments. So it may be the next 3 years. It may be 10,000 a unit over the next 3 years, because you simply just can't, there's no other way to work it in the budget. So the cash flow projection is the key element here to look for what the annual reserve contribution is per year, or if there are any additional assessments in a specific year. We have several of those that we're currently working through and trying to figure out how. There was a question earlier as to, do you have 3 years to get everything done with the reserve study? So the reserve study goes out 20 years and may say you have to replace the roof in 3 years, you have to replace the siding in 10 years. So you don't need to do the work unless the engineer lists it as immediate work. Everything else, you're just building up the funds till you get to that point, then you spend them. And so it goes up and down, right? You build up the funds, you spend them, you build up the funds and spend them. And so the idea is that you never fall below a certain threshold. And most engineers will say that their baseline is 5% of the total common area of the association. So it may be that they say you should never fall below $50,000 in reserves at any one point while you're doing the building up and spending of reserves. It may be higher. It'll depend on what that study does. But the point is that you have to get within 3 years of the ending reserve balance that the study tells you to, and then going forward, you have to put in the budget and collect enough reserves in accordance with the reserve study.
Okay, so it's
And-
really the reserve study is really a longer term document, longer term plan. At some point, we're going to need new roof. At some point, we're going to need new HVAC system. We need to have this much money ready in 12 years when that's going to occur. So
It's
that's
a
part of it.
planning tool. And so that's why every 5 years you want to update it. Some things may come sooner, some things you may be able to extend out later, but it's a financial planning tool. It's not set in stone. It just so that you have that planning tool, so you don't end up with these major special assessments.
Right. And that's really the key, I guess, what the change is, what people are focused on is right now, associations who are underfunded, they have 3 years to get up to the appropriate level. That's really what the issue is right now. Okay. All right, let's switch over to Jason. And I know that you had said you've been involved with some or given some updates on Fannie, and I think Fannie Mae is changing its requirements with respect to condos kind of to deal with this and some structural issues versus maintenance issues. You kind of give an overview, I guess, basically what you're seeing from the mortgage, the lender's perspective.
Yeah, absolutely. Thank you all for having me here. I appreciate it. And to double down on what Igor said, I couldn't agree with him more. Long term, this will be a good thing. It will cause less questions, especially from my side of the fence. I'll speak to you today specifically from Fannie Mae and Freddie Mac lender. You have your portfolio lenders that can choose to do things that they want to do. But as it pertains to Fannie and Freddie, the reserve study is going to, for the association, require them to have an escrow account like you would on your mortgage, all right? And you got to save the funds, spend the funds exactly like Igor said. The language in that reserve study is going to matter to us. The reason is, effective September 18th, Fannie Mae and Freddie Mac are putting in new requirements for the condo approval process. So the reserve study itself is now a tool that the lender may ask for. It's not a definite, but they may ask for it to determine what the special assessments are for. So again, back on what Igor said, the language matters in those studies. What specifically the assessments for is going to matter, because we will now be required to look at this and determine, okay, what's the assessment? What type of repairs it's for? Because if there is any deemed critical repairs For the building, it stops right there. You're not moving forward with that transaction should the financing be involved. Those critical repairs, I got it up here on my other screen, water intrusion, mold, material defects left uncorrected, basically your safety, soundness, and habitability, or if there's maintenance items that could be completed within 1 year that are $10,000 or more per unit, and there's no funding plan in place for those, hence the reserve study, and there's no funding plan in place for those maintenance items, that's constituted as a critical repair. Transaction stops right there until these things are completed. So the other thing, obviously from a qualification standpoint, what are the assessments, how long, all that could affect the buyer's buying power in terms of their debt ratio qualification. In terms of the building qualification note, your delinquency rates, and you brought this up on one of the potential questions. Your maintenance delinquency rates and your traditional delinquency rates are two different things. So it's 15% of 60 days or more. So if you have a massive special assessment and then a lot of people end up falling behind on that right there, should that question get answered on the condo questionnaire accurately, could cause some hesitation in your lender for moving forward on that particular condo. But yeah, communication is going to be key. There's much information that can be provided up front to the lender so that they can start deciphering what is going on with that particular building. And they're going to be cautious. They're going to be cautious because of what happened in Florida. You got an underwriter, I tell this to everybody, you got an underwriter, they're sitting in a room with no windows and one light, and they're reading papers. So their interpretation of the words on that paper is going to play a lot going forward into the condo approval process. But again, 3 years from now, I think we'll be in great shape. So let's see here. You asked about conventional government financing. In our area, we don't have a lot of government stuff, but if the condo building is already on an approved government list, generally speaking, the lender is just going to ask for the updated insurances and move forward. All right, you might, and that's about it. But for your conventional loans that we do more frequently, you're going to have a new condo questionnaire done every single transaction.
Jason, just so you know, we have local banks now starting to ask for copies of the reserve studies as well.
See, so okay, so it's spreading everywhere, and it's getting in. Thank you, Igor. It's just getting into the safety of the building and making sure there's enough funding to maintain the building.
Jason, can I ask a question? This is just to clarify for myself, honestly. If the condo association has conducted the reserve study, they know that they're underfunded, they need to get to whatever dollar amount within 3 years, and there are some repairs that need to be made. Let's say something is a critical repair, would that loan be approved if they have a plan in place to get there? Like, they're going to impose special assessments in whatever dollar amount gets them where they need to be in 3 years? Or does the fact that it's classified as a critical repair now, does that just stop it forever and ever? Amen.
Yeah, that is a great question. Now it's okay. September 18th, that will stop it.
Okay.
If it's classified critical repair, critical repairs have to be fixed regardless before it can be moved forward. So again, the language, getting a qualified professional, somebody comfortable in your area that can write these things out accurately is going to matter greatly.
Okay.
And then it gets into the maintenance. And I saw in one of the questions, how do you replace a parking lot, I believe. So that would be a maintenance item type thing, that not affecting the structural safety or habitability of the building per the critical repair list. That would be a traditional maintenance item. And then for those maintenance items, I get asked this a lot, how long are you looking forward? We're looking forward 1 year. Okay, what's within the maintenance items for this next year? Assuming there's no critical repairs, and what's the cost of that? Is there enough money in the budget to cover that? That's a funding plan. If the association's getting a loan to cover those maintenance items, that's a funding plan. That's okay to move forward. And of course, the special assessments, and then your lender may ask for meeting minutes too. Igor touched on that in the beginning. They're going to ask for as much documentation as they can get to determine, is there a funding plan in place? What types of repairs are there before they issue the approval on the building?
So I always found that one interesting, that the condo or the HOA law do not require us to disclose meeting minutes. But various lenders over the years have requested copies of meeting minutes so that they can see what's going on with the association. Is there any discussion for any unanticipated project, special set?
All right, Jason, let me ask you a question too. I don't know if this is in the chat, but this is something that just a sort of a practical question again. If you have a, a buyer who's wants to get financing to purchase a condo in Ocean City, and the condo association has just completed their reserve study, they have not imposed a special assessments, but just doing the math, it's quite obvious that they're going to have to impose a special assessment. How do you deal with that as part of the loan approval process?
Yeah, so that's a very good question, because specific to, that's one of the short-term challenges we're going to have, specifically in Ocean City with the buildings that haven't had these done. Again, back to what Igor said, communication. The board's going to have to get together quickly, because this is an instance where your lender's going to say, okay, back to HB 107, let's get the reserve study, because there's, to Igor's point earlier, there's a funding plan. Okay, so now we know the number. So we're going to look out the number. Let's just establish, hopefully there's no critical repairs. We know there's maintenance items of X going forward. Board, you got to hold a special meeting quickly here. How are we going to pay for this? What's the plan moving forward? So we're going to have some communication back how that's going to be. Are you getting a loan to pay for it? So that will be the short-term challenge over the next year for us.
Okay.
There was one good question in the chat. A lot of associations have a cap in the budget. So the new law eliminates that.
Yeah,
With the new law, the condo association has to fund the reserves. And the unit owners do not have a vote on that. It's so the board of directors really, because it's their job to run the association, they have to fund the reserves in accordance with the law. The owner, the cap provision does not apply to funding the reserves.
That was a good question. Thank you for answering that.
Yep. So in that instance, exactly what Igor said, the board gets together. We're doing a special assessment. Here's how much it's going to be per unit. We incorporate that into the qualifying with the buyer. We move forward, assuming there's no critical repairs.
Right. Okay. I think just from some of the questions, and I mean, I think we all understand this. I think there's some some resistance to this, or, is this overreaching? Is this really necessary? I think, to be honest, I don't want to sound harsh, but all of those things don't matter. I mean, it is the law, it's required. And I from the general tone of the conversation, I think the associations need to get on board with this as quickly as possible. And again, if the association drags their feet or gets someone who's not qualified or resists it, they're really hurting themselves, because that's going to adversely impact the ability for the buyers to get financing for those units. So it's a transition period, and there's a lot to be done. But Jason's point was very well taken. I think it just is something that needs to be done quickly. And that way, moving forward, the buyer will know, the lender who's going to finance the transaction will know what the financial impact would be on that buyer, and they would move forward. And again, the state of Maryland association, they're going to know that all repairs are being done. There's a sound, solid financial plan in place to make sure that the money is there in year 7, in year 12, to take care of repairs as they become necessary. Just in general, I wanted to ask each of you if you guys have any specific recommendations or guidance let's do it for our members, right? If someone is a listing agent working with a seller, what's some best practices or guidance for them? And also for someone who's maybe working with a buyer. And again, I think just during this transitional period. Karen, do you have any recommendations? Are there resources through the state of Maryland that might be helpful besides your hotline?
Our hotline is one resource, you are correct, but it is a difficult situation. It is something that is, if you are a seller who is in a condominium association or a homeowners association that now has a special assessment, it's going to be difficult. But the important thing is making sure that the individual knows that. You might be able to work a deal where you agree to pay a small part of the special assessment for them to be able to make your home sell. That may be a possibility. But it's going to be a difficult situation if you're in an association where the funds have not been already set aside through a reserve study in the past. If you are a buyer, that might be something that you can negotiate. You can't negotiate with the association. The amount that's due is what is due. It is just simply, can you negotiate with the seller, anything to work something out so that you can have that. You also, as a buyer, might want to, take special precaution. Is this an association that you want to be a part of if they are that far behind in their funding? It's something to remember, because when you are raising funds that you have not had in the past, you're going to have people who cannot pay the funds, and it's going to result in deficiencies in the ability to create those funds. So it's something to look at as a buyer, make sure that you are aware of the situation and you know what you're getting into.
Good advice. Thank you. Thank you. Igor, do you have any advice or best practices, sort of suggestions? Again, thinking specifically about buyers and sellers and their agents.
Again, communication. Where there's a will, there's a way to make it happen, right? We see quite often where they'll negotiate as part of their sales contract who's going to kick in how much towards that future funding. So it's open communication. The worst thing you can do is someone thinking that someone's trying to hide something. That's why, even though not required by law, it's been our practice for decades to include at least 3 years worth of meeting minutes, so that there's that transparency. There's no risk of paraphrasing. The facts are what the facts are. And once people understand the fact, they can make a better decision towards the intent, whether or not they're going to proceed with the purchase or not. But what I find most disturbing is when someone feels that someone's trying to hide something, and that's when deals fall apart.
Right. Thank you. I'm just thinking, as you said that, I think I guess some associations do provide minutes, some do not. That might be a practical tip maybe for a seller, if your association does not provide the minutes, or maybe just something for the seller to keep track of. Save copies of the minutes. They might send them by email, delete. Maybe the seller should not be delete anymore. Might be good advice for a listing agent to ask the seller to go back and search and see if they have minutes for those meetings. You may not be able to tell them what dollar amount is going to be imposed, but at least to give them a heads up. Hey, here's what I know as of today. And as Igor said, I'm disclosing everything that I know. I'm not concealing everything. Here's the information that I have, and I'm sharing it with you. So I think that's good advice as well. Jason, did you have any advice specifically, or sort of best practices? I guess probably you'd be coming from the buyer's perspective for the most part, right?
Well, yeah, both sides. I mean, honestly, I've been talking to a lot of my partners from the listing standpoint, and we're putting together a little, cheat sheet, because once you get the listing, or during the listing, ask the questions. Has one been done? Do you know of any major repairs from the last meeting? Get as much information on that as you can, I would presume, and then get with your lending partner up front. Make sure that they can get a building done or approved in advance. So once you get a listing, let's start to get that information to your finance partner. No, you can't require them to use that, but at least they can go through the process and get the building approved and start to uncover this well in advance. Now, in this market, deals are moving very, very fast, but that at least gives a head start instead of waiting 2 weeks down the road to start the process. Let's do that right up front. And then from the buying perspective, same thing. We're going to ask the questions. Hey, has this been done yet? Is there any major repairs going on? For the associations, if anyone's there, the language in those minutes matters as well. We had one year or so ago, and they said, well, the pool shed is deteriorating. That's a very graphic statement, and an underwriter in a room is going to have concern over the safety because of their deteriorating pool. No, I got to take it as a board, right? It was rotted. So we had to take a picture of that. It's okay. And it just caused additional explanation. So that's the language matters. Get with your finance partner as soon as possible, and to start to vet the building as quickly as possible.
Okay. All right. That's good advice. I think we have a little bit of time left and we have a lot of questions. So I guess if it's okay with you guys, I'll kind of just scroll through the chat. Some of them are repeats, so we've answered them already, but I'll try and hit the questions that we have not covered yet. Someone is asking for a copy of the new law. We can do that. We can share a copy of the law itself, the bill that was passed, and we'll share contact information for all of the panelists so you guys can follow up with them individually if you have questions afterwards. This one, is there a list of condo associations that are in compliance? I know of one in particular that repeatedly ignores the law on these things. I don't know that is there a list of approved condo associations with respect to reserve studies? It doesn't sound like there is. No, okay, there's not. All right. If a reserve study was done in 2022, are they required to get another one by 10/1, or does a 3-year law apply? 2022, they'd be okay, right? Igor?
Yes.
They're good?
Yep, they have 5 years to get another one. So by 2027.
Okay. Oops, I just jumped there. A small HOA, 44 detached homes, no common elements other than storm management, I guess, or storm pond management, it says, and common area maintenance. Would this reserve study apply? HOA with single family homes, detached homes, storm management, I guess there's a pond and some common area maintenance. I guess, if it's in excess of 10,000?
Correct. And we wouldn't be able to tell just by knowing it was a stormwater management pond. You'd have to know how large it is, what's the value of that. So you'd look at your original documents.
Okay. All right. What was that? Residential condo shared with commercial shops. If you're selling a residential condo, the law would apply. That's, yeah, mixed use, it would still apply for the residential unit. Unless, correct me if I'm wrong. I would assume that it would. Okay. Let me see. Counties that already have the law in place, are you seeing non-compliance impact the ability to get mortgage or insurance? I guess specific to Prince George's or Montgomery counties, are you seeing any impact from associations that are not in compliance? Maybe Jason, would that be you? I think someone's trying to ask you to use your crystal ball. If we look at Prince George's County and Montgomery County, can we sort of extrapolate from that, X percentage are not going to be in compliant, or it's going to cause a disruption or not?
Yeah, we don't have that yet.
Okay. So we don't know. To be determined, I guess.
To be determined.
Let me see. Reserve study disclosure applies to resale of home in the HOA, or does it only apply to condos? If the HOA has common elements in excess of 10,000. So I think we said this earlier, it applies to condos and to HOAs with common elements in excess of $10,000. Okay. Most recent previous. Okay. Someone said, look at the most recent and previous condo minutes, which should speak to the additional assessments. Great idea for buyers to request that. Great idea for sellers to disclose that and share that information. So yes, I agree with that. Let me see. We have a condo association that is not being fiscally responsible, refuses to show us the true budget and recent reserve study. Is it not the law that they have to share this info with all unit owners? This might be a question for Karen.
Yes, you're absolutely entitled to that information. And if you're not getting that information, you should file a complaint with my office. You can file it right online at www.marylandattorneygeneral.gov. Everything is all spelled out. It's not abbreviated. Because you are entitled to that information, they should be providing it, and our office can follow up to make sure that that is happening.
Yeah. All right. Does the reserve money have to be in a specific account identified for the reserve study? Igor, I guess, would that be you, or is that just a?
So we had a separate discussion with Delegate Holmes on a lot of condo associations or HOAs will budget to fund the reserves and then spend them on flowers or landscaping and not actually put the money in reserves. So the IRS has a specific role in this, and your CPA or the condo or HOA accountant that does the tax filings yearly is supposed to track and tell you that you cannot use reserve funds for non-reserve items, and you can pay for a reserve study out of a reserve fund, provided that the reserve study has an allowance for paying for a reserve study.
Oh,
So
gotcha.
you can take the money out of there as long as it's in the reserve study.
Gotcha. Okay, that makes sense. I think for easy concept for all of our members, basically you can't use escrow funds to pay operating costs, right? Has to be a segregated account,
Subscription.
separate. Yeah. We answered this one. Someone had said the HOA has a cap. How's that affected? Basically, that's already been answered. The cap would not apply. The new changes would supersede or override any caps in the governing documents. Let me see. I'm an appraiser. Aha. We are required to note what special assessments are, yet we struggle to get this. Is there a central reporting location? No, I'm sorry. I don't mean to make light of it, but there is not a central reporting location. Let's take that from the appraiser's perspective. Is there a best practice for an appraiser to get this type of information? I guess they would contact the association, correct?
Or management company, yeah.
Management company, yeah, okay, thank you. Someone else, a lender, Rich Green, I know. We have used meeting minutes to our advantage in clarifying issues which have enabled us to approve a loan. That's good information. So I think that's kind of a takeaway for everybody. Pay attention to the meeting minutes. A seller may not, people in Ocean City, that may not be their primary home. It could be their second home or second residence. They may not be paying attention to those meeting minutes and might be deleting it or not worrying about it. I would just say for everybody, it's probably a best practice to stop doing that and to start paying attention to your meeting minutes. Sellers might want to share those, buyers might want to ask for them. And it sounds like the association or the management company is keeping track of that as well. In many cases, lenders will be asking for that as well. So that seems to be a common theme and a good takeaway for everyone. This might, I think Walt had asked this previously, may have been touched on. Based on these reserve studies, will it change the insurance coverage? Will all buildings be required to cover the reserve replacement value?
So the two different things. The only thing with the state law is that the condo and HOA have to have enough fidelity or crime coverage to protect the funds in all the reserves plus a quarter of the budget. So annually, each association is supposed to adjust that limit up or down depending on the amount of cash they have.
Okay. I forgot to mention, I think in the intro, Karen also worked with the Maryland Insurance Administration previously, so she has a good insurance background as well, which is why they are able to successfully mediate so many disputes. I think you got a great background for this type of work. What type of legal oversight? Oh, this is interesting. It's great that the reserve studies are being mandated. However, they're only as good as those responsible for implementing the direction and guidance provided by the study. A lot can happen in 3 years with poor management by an HOA. What type of legal oversight is in place to ensure that the guidance provided by the reserve study is being followed? And maybe Karen, do you want to address that? Or what if a unit owner or a lot owner believes that they're not following the guidance? What action can be taken?
They should file a complaint with our office. We will then go back to the board and ask them what they are doing and to comply with their reserve study and to comply with the law to make sure that they are following those things. If they are not following them, they have a reserve study, they know what the law is, and the board is consciously making a decision. The board runs the risk as board members of being personally responsible, potentially, for not complying with the law.
So great questions. I tell everybody, if you're not happy with it, get on the board, get elected, and help run the association correctly. The other thing that I've told many clients that did not want to comply with the law because of big government oversight is that a board member is protected by the directors and officers liability as long as they follow the laws and the bylaws. The day they willfully stop ignoring the laws and disobeying the laws, they lose the protection under the DNO. And if you lose that protection, a lawsuit can cost easily in the 6 digits. You lose that defense cost. Now you have to pay it out of pocket or out of the association's funds. Things just get ugly. So it's just easier and simpler to follow the law, regardless if we like it or not.
Right. That's that's it. All right. Let me see. Has the new law taken the useful life of the building into consideration during its creation? We all know that nothing lasts forever. I think
That
it
is
sounds like it's
great.
useful life of the amenities or the structural components, or
That's a great question that we have debated, as many buildings are approaching 50 years down here. What is the true useful life? And there's a push on national level for starting to conduct structural inspections like they're mandating in Florida right now, and try to establish a deeper dive into the structural ability of the property to withstand another 50 or 100 years. But at this point, the reserve studies do not address those items.
okay. All right. Someone just asked a quick question. The bill number, I have it, that House Bill 107. It's from the 2022 session. This was passed last year, but the deadlines were in 2023. But if somebody wanted to get a copy of the bill, the fiscal and policy note, we can talk about that offline or whatever, but that's always a good resource as well. You could go to, it's the Maryland Department of Legislative Services, House Bill 107 from the 2022 regular session. I think this is a good question too. Karen, maybe you can answer this one. How about new construction? A condo that was just built, like the condo was just completed, say in 2022. Are they still subject to this, or are there different requirements for new construction?
There are no different requirements for new construction. They would still have to make sure that every 5 years they're doing a reserve study to make sure they are doing what they need to do to be fully funded.
Okay, great, thank you. I think some of these are kind of, we have touched on a lot of these. Any way to get the information early before making an offer? It sounds like it kind of depends. Maybe yes in some situations, maybe not in other situations. Igor?
So the law requires that the association discloses a summary at the annual meetings and provide a summary when they send out the proposed budget. And the law also provides that an owner should be able to obtain a copy of the reserve study. So your seller, one way or another, should be able to obtain a copy of it if it exists.
All right, thanks. Another question, a lot of volunteer homeowners managing HOAs. How are the HOAs being notified that a study is now required? I'm not sure who would be best. Igor, you're involved in association world and property management world. Is there any?
I mean, the various, news articles and just discussion with various professionals in the industry. There are still associations finally finding out about this law, and so I guess as long as no one's selling or refinancing in the next few months, they have time to get it done.
Right.
But the challenge is going to be if somebody's trying to sell or refi before it's done.
What recourse does an owner have or rights if the association doesn't comply? Karen has responded to that. File a complaint, file a complaint, file a complaint. Okay. And then another one, I'm not entirely sure what this says. Please clarify, is it $10,000 elements or $10,000? Does that make sense?
The value of common elements should be $10,000 or more.
Okay,
Right.
thanks. Okay, I think that was what the question was. Oh, who decides if there's more than 10,000 in common area elements? That would be in the documents, yeah?
A contractor may be able to tell you. We've had that question asked before. for like the small HOAs that maybe only have stormwater management ponds. What is the cost? And with a stormwater management pond, you don't really replace it. You just have to dredge it every 15 or 20 years, whatever it is. So you can start talking to a contractor or an engineer to figure out if you really need to do it.
All right. Do you believe these laws, let me see, do you believe these laws will take some of the pressure off agents who may or may not be told about issues or upcoming assessments in a condo or HOA association? I think that was kind of addressed broadly. I think in 3 years from now, I think it'll take the pressure off. Right now, during this transition period, I think it is going to be a little tough. And that's why we're having this webinar, quite frankly. And again, thanks to all the panelists who have so much expertise and are sharing it so generously. Again, if somebody willfully ignores, talk to Karen's office, talk to Karen's people, file a complaint. Oh, another good point, Lisa May from our office pointed this out. This is good information as well. Thank you, Lisa. The Department of Housing Community Development, they are creating a website to explain all the new condo and HOA legislation to the public. It's going to be a public facing and geared toward consumers. So they're creating a website. The bill that created that goes into effect in October. So I think that would be another good resource. Thank you, Lisa. That'll be a good resource for volunteer HOAs to kind of stay on top of things and understand what laws are in place, any changes that may be implemented so they can remain in compliance. That's great information. Oh, goodness. You're not going to ask me about earthquakes. Oh, my goodness. What happens to studies when we have an earthquake that creates structural issues that need immediate money from reserves? Has that been addressed? I mean, maybe it doesn't have to be an earthquake, but I think that's a good question. That's kind of, isn't that the whole point of having reserves? So you're kind of ready when things come up. I guess this would be an unexpected event, though. Some unexpected event comes up. What would happen with the reserve study?
I mean,
guess-
yeah, I don't know if anything would happen with the study, but if it's issues, that's what the new Fannie Freddie guidance is going to deem a critical repair, and it would have to get fixed immediately.
Right.
So then future transactions can happen in that building.
Great. Okay, good. Thanks, Jason. And then again, that's why they have to do, you don't just do one reserve study and then it's completed. You have to do it again. And as things change, the funding levels and the budget will be adjusted.
Mhm.
All right. Oh, it did happen with the last one. Okay. All right. I think that might be it. Emergency repair. Insurance, we've already addressed. I think we've gone through most of these. We kept you guys over a little bit, so thank you for hanging in there with us. Anybody else see any questions that you think? I think the majority of them have been answered already, or very, very similar questions have been answered already. We are at 12 minutes after 2. I apologize, we went over a little bit, but we wanted to be as responsive as we could. And again, honestly, take advantage of picking the brains of our experts on the panel. Thank you again, Karen, Igor, and Jason for participating. I think Kelly, when she can share information with everyone who registered for this, so we can share a copy of the bill if everybody would like to see that. We can share contact information of the participants. And just so everybody knows, if you have colleagues who are not available today and who are interested in this, who want to learn this information, we always record our webinars and then they are posted on our YouTube channel. I don't know how long that takes. Usually, it'll be up in a couple of days. So if you know anybody who was not able to participate today, let them know that it was recorded and that information, the video will be shared. And again, we'll share the information, the contact information for the panelists. We're happy to share that information. We have a legal hotline. You can reach out to our legal hotline as well. That number is 443-716-3502. Mondays, Wednesdays, and Fridays by phone, or you can submit a question online. The Maryland Realtors website, we have a way you could submit questions electronically online. So I think that is it. I think we're going to wrap it up. Kelly, do I need to do anything else, or are we good?
I think we are all good. You basically covered it. Anybody who registered for today's webinar will get a follow-up email, as mentioned by Kathleen, with everybody's information, the YouTube link to this video, and then any upcoming webinars that we have in the future. So just stay tuned for that email. If you don't see it by tomorrow, then it'll be first thing next week. But we appreciate everyone attending and our panel panelists who were here, who joined us today. So thank you all.
All right.
Take care.
Thanks everyone for watching, and a special thanks to our panelists. You guys were awesome.
Thank you.
Thank you.